Welcome to the Titans of Industry show. I have one of the smartest people that I know in the alternative media with us today. Charles U. Smith of twominds.com joins us. He's a regular on many podcasts. His work gets picked up by many big sites, including Zero Hedge. Love his commentary. And actually, we're going to pick his brain regarding some very controversial topics. You're going to get a lot of value out of this one today, so stick around. I want to first off say thank you for joining us, Charles.
Great. I'm delighted and honored by the invitation to be on the program.
You know, one thing I really want to ask you about is these reports coming up in the last few days about the advances that are happening in poverty eradication and in wealth creation in the United States under Trump, but even during the Obama years. But it's becoming bigger and better under Trump, it seems. And I want to ask you, is this a win-win? Are these advances 1 million households getting back to the middle class? So $50K and above in annual income. It's considered middle class. 1 million households got back to that. 6.7% of 6.7 million people are off of food stamps. I saw actually a 95-page report that I went through from several government sources and then from Statista.com. I want to ask you: is this a net positive, or are we seeing this only because of tax cuts and only because of huge deficit spending, etc.? Is there a price to be paid? And if so, is the price worth it?
Well, that's a terrific set of questions. And I really appreciate you asking something that's complex, but it really gets to the nitty-gritty of a functioning economy. In other words, is it serving the populace as opposed to just the owners of capital or insiders? And so these kind of positive developments, let's kind of try to break them down a bit. Number one is energy affordable? Because obviously, if an economy has energy that's cost-effective or affordable, that's a big plus, right? When energy gets really expensive, then that makes it more difficult to expand business, hire people, and have a consumer with disposable income. So energy is not cheap, but it's not very expensive either, historically speaking. So I think that's part of the backdrop for why the U.S. economy has been able to add employment. Number two is economist Michael Spence talked about the kind of labor that is tradable and the kind of labor that's untradable. So tradable labor is obviously assembling goods for the global marketplace in factories. That can be done pretty much anywhere. Assembling or manufacturing components, providing call centers and financial services. This kind of stuff can be done virtually anywhere in the world, right? These are commoditized forms of labor. And then the untradable kind of labor is like getting a haircut, making a latte and serving it to somebody, and retail, bricks and mortar kind of stores, and government services. So
and a lot of healthcare.
Yeah, healthcare, education. Education, as we know, is going a lot online, but healthcare, and in fact, even healthcare is getting more online as people seek efficiencies. But yeah, you're right. These are huge employment sectors, right? In developed economies: healthcare, education, government services, retail, so on. So it's not surprising if we look at what's at the growth sectors, which tend to be restaurants and consumer services. That's where the big job growth is, and that's where you see the help wanted signs. And we were discussing prior to starting the recording that you've had the opportunity to travel around the world a bit in the last few years, and so you are better able to report than I. Is the rest of the world in a similar situation in terms of there's just so many help wanted signs in urban America? or at least in lots of parts of America. There's a lot of help wanted signs in restaurants, cafes, retail stores.
Definitely. In Europe where I'm at right now, in the last 3 months, it's some streets are as packed as New York City. It's the economy around the world is definitely not where it was 10 years ago, not what it was 8 years ago, 7 years ago, 6 years ago, 5 years ago, 4 years ago. It's much more robust. But like I said, and that's basically the question here, is it because the debt burdens that were on the consumers and on the private sector, did we just transfer all that debt burden into government, which helps because they can kick the can down the road a lot more than the consumer can? But at some point, the rubber does meet the road. So that's my question to you. Have we transferred the debt burdens of regular people, corporations, etc., moved them on to governments, and now we've been able to essentially take interest rates to zero around the world, zero and negative, refinance these debts at zero or negative, and issue 30, 40, 50, 100-year bonds, and basically continue to live well beyond our means for the next 100 years.
Well, I think you've just summarized the key point, which is, are we living beyond our means? And the argument there is our productivity increasing as fast or faster than our debt? In other words, are we producing goods and services more efficiently using the same amount of capital and energy so that we're actually keeping pace with this tremendous expansion of debt? Or are we actually sort of stagnating in productivity and we're actually producing fewer goods and services and while our debt explodes? And I think you've hit the key issue here. And I believe the answer, so far as we can tell, is we're not increasing our productivity at the same rate that we're expanding debt. So we're borrowing money from future earnings and future resources, not for investment that's going to get us further ahead in the future. We're basically just burning that money now to support consumption in the present day world. And I think the reason why I started with the tradable and untradeable labor is, a lot of labor around the world was disrupted by globalization. And globalization in a nutshell is all your tradable labor moves offshore if it can be done, for 20 or 25 or 30% of the cost of the labor in an advanced economy. And so that's put the burden on job creation on the untradeable sectors. And then I want to introduce the idea here that the untradeable sectors just don't pay that much in general. And the reason why is the tasks are relatively simple. Like, in other words, the skill set level is fairly low to be a retail clerk or work in a cafe. So these don't pay enough to live well in very expensive urban parts of America. So I also want to bring in the geographical elements of that advance from out of poverty and into the middle class. It's and I think this is a global phenomenon. If you're in a very desirable urban environment, it's unaffordable to those people earning minimum wage or say minimum wage plus 50%. They can barely get by. Rent a room, and that's, you really can't afford much more. And so when I spend a part of my year in the San Francisco Bay Area, and there's help wanted signs everywhere. But if you're getting paid $12 to $15 an hour in such an expensive locale, you're basically just scraping by. You're sharing a room. You can't afford a car. You really can't afford to save. You can't afford a family. So this is why there's a labor shortage, is you have to pay people enough that they can actually not just get by, but have some hope of prosperity. So then if you get in a cost differential, where if you're in smaller cities where $50,000 can actually buy a middle class lifestyle, that's where you're getting the advances out of poverty. But if you're getting $50,000 in San Francisco, you're still mired in poverty. So there's that geographical differential too. But to hit your main question again, yes, I do believe that we're living off of debt, and that is not a win-win situation. It will be a win-lose situation, even at zero rates, because what happens at zero rates is then you throw capital off. Capital no longer can earn a safe return. It's then forced into casinos that create bubbles and bursting bubbles. And you're also loading up the household with debt that is going to put them in a bigger bind going forward. And there was a recent piece in the Wall Street Journal that was profiling a number of middle-class households where people were earning over $100,000, which would be basically double the median wage in the US. So these people were doing fairly well, and they were all heavily burdened with debt, student loan debt, vehicle loan debt, and mortgages. And they were basically just barely keeping their head above water. And so that opens another kind of window into this picture, is that how burdened are people? And if you're in the wealthy class, you don't really need debt, right? Because you have the income. And so we need to kind of differentiate who's burdened with debt. And if it turns out it's mostly the middle class, then the middle class is actually fragile. It's vulnerable to any downturn in a way that it might not have been 20 years ago when the debt levels were lower.
Definitely, what the study showed, that 95-page study, it talked about the fact that the middle class in America has shrunk tremendously, considerably. But it is also important to note, at least in my opinion, my observation, is that the United States middle class was artificial to begin with. Most of it lived on tradable, like I said, tradable employment, because of the fact that everyone else was too busy fighting each other, and the United States was just enjoying the fact that it was isolated from World War I, World War II, and then it boomed subsequently. Not only because of the talent factor, and that is where I want to ask you about the coming decade and the coming 2 decades, basically where the world is going. I don't know if you've seen a recent documentary produced actually by the Obamas on Netflix. It's called American Factory. It's about a company, a Chinese company that manufactures windshields for cars. They have a huge, prospering, booming factory in China, and then they decide to build another one on top of not on top, but instead of the GM factory that was closed in Dayton, Ohio. And it's a well-made documentary about how that company, that Chinese company, brings Chinese workers to the US, employs also American workers, and what happens to productivity, to company culture, to profits, and all the rest of it. The bottom line for someone who watched that documentary is that America should focus on educating its population to understand the realities of the 21st century. It looks like Americans are living in the past. They have sort of a self-pride that some jobs they will not do, and they will not go back in time in terms of their wages. So if somebody earned $30 an hour, he will not be very happy by earning half of it, although that is the reality of his occupation or his job, etc. And on the flip side, he doesn't have enough savings to retrain himself, or the community doesn't offer any retraining. I want to ask you about the jobs paradox in the United States. Which jobs should people focus on? That you're 20, you're 25, you're 30, it doesn't matter, you're 40. Which occupations are important, are strategic, can offer high wages if you work hard and smart?
Well, it's another great topic. And I did write a book a few years ago called Get a Job, Build a Real Career, and Defy a Bewildering Economy. And so I've thought a lot about these issues, and I get a lot of email from young people asking for just this kind of advice. And again, we have to start with, I think the best way to answer it is to look at the fundamentals. And as you said, when economies were more self-sufficient, in other words, they were less dependent on global trade for their prosperity. And this includes, I think, many countries in Europe too. I mean, if we look at what the French call the Glorious 30 years from 1946 to 76, approximately, when the European economy exploded, and industrial production went up 12-fold, and so on. I think one of the dynamics we have to look at is the low-hanging fruit, right? It's like when Europe was devastated, Japan was devastated, so they could rebuild from the ground up and use the best technology that was available at that time and really increase their productivity. So the capital had a tremendous return. And we can see this in the interest rates. In other words, interest rates were high, relatively speaking, because capital could earn such a tremendous return. And we have a different environment now where capital earns almost nothing, because it turns out it's very difficult to find an investment that is going to guarantee or that's going to give you a big yield. And so for a lot of different reasons, right? But so the labor picture is partly connected to capital. In other words, if nobody's investing in new businesses because they're concerned the yield isn't there or it's too risky, well, then there's less opportunity for labor, right? I mean, it's connected, right? Labor and capital are connected in that way. In terms of jobs, okay, we all know about automation, robotics, AI, and we all know that what the danger is that as software eats the world, to use a classic expression, that it's moving up the food chain. In other words, the robotics and software to automate an assembling machine in a factory is relatively straightforward, but the advances are moving up the food chain and taking away so-called white-collar jobs, right, in the legal industry, in education, and healthcare. And so that process is just getting started in terms of the impact on employment, right? And so what kind of job can you get in such a fast-moving world where technology might eat the job that you spent 4 years training for? And so again, we look at tradable and untradeable, and you go, well, if you're gonna cut hair, or you're gonna be a chef, that kind of thing, you're not gonna get your job can't be offshored. But it could be heavily impacted by competition as other people are laid off, and automation starts gutting entire other industries, and people will start crowding into whatever they appears to still have employment. And so then, of course, what happens to wages when there's an oversupply of workers? Well, wages are suppressed, right? Supply and demand. And so my basic answer is, your best bet is to assemble a number of skills, because automation is really good at replacing like a single task that can be broken down into steps, because that's what software can do, right? Break it down into steps, so there's input, process, and output. That kind of stuff can be automated. But if you're in a job, like say you're an on-site welder, like on an on-site position where you're say maybe repairing a ship or something, it's really difficult to automate something that's in the real world, that with a lot of uneven services, where you're going to need a variety of skills to get the job done. And so that's one example of a skill that is going to be really hard to automate, and maybe impossible. In other words, it'll always be cheaper to pay a human. The other thing is, if you can layer up your skills, so-called full spectrum, or full deck, it's called, where you have some project management skills so that you can coordinate other people, whether as peers or as a supervisor. And then if you have some accounting skills and math skills, in other words, so that you can track money, you can track production, and have like a comfort level with data. And then obviously having some sort of technical skills in terms of being able to work with software. And then the fourth layer would be to have like a deep experience, which is very difficult to mimic, despite machine learning and so on. There's a lot of skills that are sort of intuitive that come from experience. So if you have like 3 or 4 different skills that add value to each other, I think that's the best way to give yourself flexibility in the job market.
Yeah, I think we're moving very much into a thinking world where the big money is for people who can make a few big decisions, and lead. Leadership is important, and making key decisions. I don't think that's something that can be offshored that easily, or automized. The human component, making other people's emotions inspired, is going to be so crucial for any company. If you even want to do a simple task, like running a shift in a coffee shop, and you do it in the right mental attitude, you can never get that replaced by robot. That's for sure. I do want to ask you, Charles, about some more financial, some more investment. We've seen an incredible 48-year run for precious metals. Incredible. If you look at the S&P 500 from 1971 until today, and at gold from 1971 until today, gold has actually outperformed the S&P 500 in the fiat monetary system. If you look at the past century and the past year and the past quarter, gold is seen to be doing as well as the stock market. That is an incredible achievement for it. But yet, all you hear is that gold is a non-productive asset. And what I think I hear most of the time are people that are down on their position on gold. And that just makes me realize how many people bought in that little space of time in 2011 when it went from 1600 to 1900, because that is the only person who can lose money on gold is the person who bought between 1600 and 1900. The rest of the people throughout history are up. It's so true. Anyone who's bought from the time of ancient Egypt until today is up, unless you bought in that little short space of time in 2011. I want to ask you, is the retail crowd making a mistake again by not participating in what's happening right now? Or is the price already saturated and reflective of too much doom and gloom, and it's actually going to pull back?
Well, that's another great topic. And again, I'm always my attempt to answer these kinds of questions for myself as well, of course, as well as my readers, is what's the context? And I like the way you've brought the context into play here, and that if we look back at the value of fiat currency in terms of its purchasing power, we've seen a tremendous loss of purchasing power in fiat currencies. And the way that we've compensated for that is by raising prices, raising wages. But the lesson of the last 20 years has been that wages are not rising as fast as prices and assets. And so everyone who earns a living by their labor, has been losing ground. And so this is how we've come to what a lot of people call a winner take most economy. In other words, the people who own a tremendous amount of these assets, which have kept their value or increased their value, have done really well. And then a small sector of the population who, as you say, has been making the big decisions, the right decisions, has the skill sets that are in really high demand. Their wages have gone up, or compensation, but the average person's losing ground. And so I think the retail person has ignored gold and silver because partly of the propaganda of the financial sector, right? Which is that, every newscast has a daily report on the Dow Jones Industrial Average went up or down, and it's always up. And they're told the economy's doing great, unemployment's low, and their wages are rising. That's what they're told, even if that's not quite true. And so why buy something like gold that's been in an 8-year decline, right, or stagnation? And so, as you say, you need to look at the long point of view. what I'm seeing, and I might be being optimistic here, is I think there's renewed interest in the average investor or person in gold, partly because it's been rising now, but I think it reflects a deep uncertainty or a fear of instability going forward. I think there might be a rising, almost subconscious appreciation, kind of like the herd is starting to shift and become unsettled about this idea that we're just going to borrow our way to prosperity, right? And as you say about these dynamics about precious metals, it's like if you look at all these other ways of studying GDP, like if you look at debt to GDP, then you get a whole different picture. It turns out that GDP has not, soared; it's actually declined, right? And so when you look at like China creating 40 trillion in new money in the last decade, and then that's about at least double their economy. It's like, well, wait a minute, did they produce more goods and services than that 40 trillion? And if the answer is no, then the money's losing value. And so that's really the ultimate play for precious metals is if our fiat money is going to be devalued and debased, either by too much money creation, then you want to have a hedge against the deflation or the depreciation, the devaluation of your regular fiat money. And so I'm thinking that might be partly why the precious metals have started rising, is that it's not just big money, that may be mostly who's buying right now, but it's also maybe the herd is finally turning toward some sort of hedge against fiat currency and debt devaluation.
Charles, I want to ask you about Trump. We are beginning an election here. What do you see happening in terms of some rabbits that he's going to pull from the hat, in terms of something that you think he will do that's different than what other presidents do in the last year before they try to get reelected? If you think he's going to pull something off like that. And then I want to ask you, what is the main positive that you take from his presidency and the main negative?
Wow, terrific questions. Well, I've written some pieces about Trump and the economy, and I think it's generally understood that every president needs a strong economy. People will vote their pocketbook. They can talk various politics and ideologies and so on. But if the economy's slowing and it's recessionary, then the incumbent president usually loses, even if he is personally popular. So Trump really needs an economy that's strong going into 2020. If there's going to be a recession, I've posited the idea that, well, maybe you should take your lumps now, like let the stock market fall, and then sort of wash out some of the euphoria and fluff, and go ahead and take a market decline now of 20, 30%. And then in 2020, announce the trade deal that everybody has been focused on for 9 months. Whether that's actually going to do anything in the real economy is maybe less impactful than the psychological impact. Like, okay, now everything's fixed with China and the US, right? So that would be, to me, a better strategy than trying to keep the stock market propped up for another year, 13, 14 months. I think that might be a bridge too far. And in terms of Trump's positive and negative, well, it's been an enormous positive for the mainstream media, because the entertainment level has been extremely high in terms of Trump's tweets and then his over-the-top critics. And so it's been a free-for-all sort of circus environment, really. So the media's probably banked a lot of money and on that. I don't know if that's a positive for society. I'm being tongue in cheek a bit, but I think the positive is that that people who felt disenfranchised and ignored um, were largely the people who voted for Trump. And the big surprise for a lot of the political punditry was they assumed that every middle class person would vote Democratic out of self-interest. And they would only be the disgruntled working class who had lost their jobs to offshoring and so on who would vote for Trump. But it turns out that a lot of the middle class people are also disgruntled about the way that the nature of the culture and where the society's going, and they feel unsettled economically, despite all the happy news, the headlines.
Well, and
And
after,
so,
sorry to disrupt, but I want to also say that after tax cuts and deregulation, it's also the rich that fear that any Democratic nominee would be very detrimental to assets prices, etc. What they thought about Trump is now what they think about Democrats.
right. Yeah, no, an excellent point. I think the positive is a democracy can only be said to function if unpopular views or views that are anti-establishment have an outlet. And so that's how I would read Trump's election was it was a lot of people might have voted for him as sort of like the other, in other words, like not the establishment Democrat or Republican. And so the negative I would say is that the U.S. needs a new foreign policy. It needs a new economic policy that's as you say, designed for the 21st century. And Trump, personally, and in terms of his staffing, it's sort of, I think it's all sort of short term and it's not very coherent. And so I think that's the big negative. I think the U.S. is struggling to create or establish some sort of plan for a 21st century economy with 21st century realities. And as you say, it's not just economic and foreign policy, it's also cultural. Like we're going to have to reset our expectations to what's realistic. And it's this Chinese expression, since we're talking about the Chinese factory with the American workers, eating bitterness, right? And so this is, you're eating bitterness when you have to work really hard to get something done. And the Chinese, of course, have proven the tremendous capacity for eating bitterness in the last 30 years. And so America might have to learn to eat bitterness.
It's a very good point. Charles, I want to ask you, if people go to Amazon.com and they search Charles U. Smith, can they see all of your books there? Or is the website the best way to follow you? Do you have a Twitter account? Tell people a little bit about how they can reach your book, your writings, etc.
Yeah, sure. Yeah. You can find all of my books on Amazon. And if you go to of2minds.com, you can read free sample chapters of the books to see what they're about.
Thank you very much. How do you say goodbye in Hawaiian? Is it the same as hello?
Yeah, it's aloha.
It's aloha? Okay. So aloha to you. And we'll definitely have you on again in a few months. Enjoy Hawaii.
Thank you so much. I really appreciated the conversation today. Great topics.
Thank you, sir.